We are breaking right now. Am I the only DJ who is excited and able to see what Jerome Powell? We've been hearing Gary Gensler. We've been hearing election. We've been hearing so much in the last 2 days. But everybody, as we told you, are you ready for this? Fomc live now. In about 20 minutes, we're going to be hearing the decision. In about 50 minutes, we'll be hearing from them on this live. And I'm here to tell you everything that you need to know, guys. It's going to be pretty crazy, guys. It's going to be pretty insane. And I'm so ready. If you're ready like me, guys, don't forget to smash the like button, subscribe to the channel. If you find some content, if you find some entertainment, if you find some community, guys, because I couldn't tell you, I'm so excited. We crushed it, guys. We crushed it. We have some positions. I want to go ahead and show you my margins, guys. I want to go ahead and show you what I'm playing right now. Cannot believe it, man. Cannot believe it. We're making some decent plays, some decent money. And as always, I just want to share with you guys. So Oscar Ramos here. Very happy that you're with us, guys. We got the power glasses. We got the water. We got the stream. We got the prices. 76.5 for BTC. Let's go ahead and drop this all the way so we know. Look at this. Who is pumping? Cronos! CRO, baby! Let's go. Finally. Finally, there you go. That's what I'm talking. I still gotta make a video about Cronos. It's just been so busy, guys. But guess who didn't sell Crow? Look at this beauty. Look at this beauty, man. Oh yes. Welcome everybody. Are you coming in? Are you coming in? We got you. We got you. We got you. Oh, my entire Crow fam is so excited. If you're like, Oscar, what are you talking about? What is Crow? What is Crow? What is crypto.com? It is a company that is going to deploy new card services, new card benefits. Cronos Chain has some burn formula right now. Cronos ETF. Oh, no. I'm telling you guys, so many people are very, very happy right now. So if you're here, I'm very happy to have you guys. So welcome. We're watching live right now. In a few more minutes, we'll be getting some results, some decisions. I did something pretty cool, you know, when it comes to Gary Gensler. I'll show you right now in just a second. But I just want to say hi to the entire community here watching. 200 people immediately. Celebrity troll, what's going on? Send it. Sleep. We got some members and, of course, some moderators. We got Josh in the house, the one and only Josh. Snaky Eye, what's going on, buddy? Happy to have you. Welcome. What's popping, Oscar? I mean, we're doing phenomenal. We're doing really good. Alerts are on, guys, so you want to subscribe. We'll see you. And we're waiting for this one, guys. I'm going to open up Margex too right here. I mean, everything is really, really doing very, very well. I'm just going to say, throw to the moon. Throw to the moon. I mean, I'm going to go ahead and tweet right now because this is incredible. This is really incredible. Like, there's so much going on. And people are finally bullish in crypto, guys. This is exciting. We're about to witness Jerome Powell speaking, guys. And I think we all want that for sure. Just like if you believe in Crow. Just like if you believe in Crow. Yes, I like that. Boom. There it is. Simple. Simple and sexy. We like simple and sexy here. We have some really promising news very soon. I like that. I like that. It's exciting. Crow is up. Look, KuCoin. Look. KuCoin. Crow is up by 10%. So much fun on Crow, right? But we just say like it is. You know, the people speak and things change really fast. Really, really fast. I'm waiting for some really good meme coins money. People are so ready and excited to make money too. So that's what we want to see, guys. People are making money on Solana. People are making money on Ethereum. Meme coins. People are making money on, I don't know, what is it? What is it? Like Tron meme coins, you name it. but also in some other ones for sure. Oscar, will we see 120,000 before the end of the year? That might be too big league, but never say never, right? What I'm saying is 80s, in the 80s. I'll be okay in the 80s. Why not? We're going to be seeing BTC for sure in the 80s, I think, with all the momentum that we have. Donald J. Trump won. Gary Gensler. Well, okay, we got 300 people watching, guys. We got a poll right there. The question is Bitcoin, $80,000 by this week. And 90% of you are saying yes. So that gives me some pretty good confidence level. But I wanted to show you this, guys. Guess who just tweeted right now? Guess who? And guess what I said? I had to. I had to do it, everybody. You know I had to. We gotta talk. And a lot of people liked it. I mean, guys, come on, baby. You know we had to. We're just excited, man. We're just excited. Oscar, hello there. I hope you are doing well. Hello from Europe. Cheers to Europe. What's going on, fam? Are you ready to witness some pretty nice FOMC vibes? Using Crow ID. Crow ID did a 500%. Are you kidding me? That's incredible. So cheers to all of you who are holding that. Okay. Everybody, we're very, very happy. We're going to have a lot more people here. So if you're enjoying the vibes right now, it's just me and the world. So and you guys, smash the like button, subscribe to the channel, and immediately, guys, first link down below, which I'm going to go ahead and help you right now because we are crushing it, man. We're just crushing it. You got to sign up on MarkJX. First link down below and now in the chat. Get up to 10,000 welcome bonus, everybody. No KYC. I want you to start winning because right now it is 76,500. Let me go ahead and show you some of my positions. I've been very transparent with you guys. We have this right now. XRP, it is 55. And these are my positions that you can see right here. We have a 21% on MarkJX 10X. We have a 5% on Shiba Inu. We're a little bit down on this one, and we are 11% on this one. So these are my long positions. What I'm trying to do is right now, Trump won, FOMC, we're going to get a cut. We'll just go ahead and start standing, basically standing. So that's what I'm looking at. And look at that, 76,500. Yes, 76,600. What else? I mean, 8%. Cronos, PEPE is also sending as well. Let me go ahead and take a look at the 1 hour right now. CRO and Maker. CRO and Maker are the ones that are doing really nice. That's what I'm looking at, man. Your view on bread. Guess who bought $2,000 worth of bread today? I did. I like bread. It's not on Coinbase. It's not on Binance. The community is huge. And I'm doing it. Have to, guys. Some of the positions that I just have to, honestly. So just letting you know, guys, if you're looking for some other positions, because I've said many times how we're gonna make our money, how we're gonna become wealthy and millionaires, right? Because I think a lot of people watching. We got close to 400 people here on the stream. Bitcoin is not gonna make you a millionaire unless you're already a millionaire. But a meme coin that the world doesn't even know about, like Dogecoin. Everybody here knows Dogecoin, okay? Now, are you buying Dogecoin? Maybe 20% of you, 30% of you are buying Dogecoin. Why? Because you know there's other new Dogecoins. How about Shiba Inu? 40% of you are buying Shiba Inu. But Shiba Inu is already known for us, the crypto consumer, but not to the world yet. So you don't want Shiba Inu, let's try PEPE. 3 billion, 4 billion market cap. You don't want PEPE, you want something under 1 billion or roughly around 1 billion. Try bread at around 1 billion. You don't want 1 billion, then try, you know what I'm saying? It goes from $1.5 trillion Bitcoin all the way down to all different kinds of possibilities, everybody. We're going to do really well. And we're pumping right now. CRO is sending, baby. Look at that beauty. That is what we needed to see. That is what we needed to see. Oh, there it is. Finally moving right now. About 10 minutes to go to see some results. So happy to have you guys. It's a good day. It's a really, really, really good day, guys. So, baby, let's go ahead and keep sending right now. Holding heavy on Shiba Inu, Crow with knife. Shout out Crow with knife. I think Bitcoin will pump about 102. Well, I'm ready, guys. As I told you before, and I'm telling my entire community, over 400 people right now watching. What's going on, everybody? Guess who owns one Bitcoin? I did it. The reason why I did it, guys, the reason why I decided to take that motion is because that money, it is not money that I'm willing to risk on a volatile meme coin. It is money that I decided to put in on something that is just gonna keep going because this is the time. It is kind of like my reserve slash fiat money. So I was like, this is the best play of the century. Let's just let it accumulate, and I'm gonna make way more money than if a bank was just keeping it for me. So that was my thought process. It's obviously helping. We're obviously crushing it. So I went in at 67,000. So it's paying off really well. It's paying off really well. So yeah, one Bitcoin, guys. Very, very, very blessed. I know a lot of friends who own Bitcoin, like many, many more than one Bitcoins. Maybe you guys own one Bitcoin. Whatever you buy, guys, as long as you're happy and you're having fun in crypto, that's I think the goal that we need to see in our industry, right? So kaboom, kaboom, kaboom. Now I'm gonna go ahead and do something here. This is ready, and let's go. I got a video also for you guys coming in from one of my partners here. So public, boom, I got it ready. So there it is. New video coming in right now, just to make sure that those who are into more risky plays, especially, betting, you're gonna be well served. India's watching. What's going on, guys? And welcome. Who's ready? Everybody who is ready to hear from the decision by the FOMC committee we're about to witness right now. Once it's ready, in about 30 minutes, we'll go. But in about 8 minutes, we're going to see the decision. It's going to be everywhere on social media. And like I said, this guy is going to be fired immediately. Immediately. This guy's going to be fired. And that's one of the reasons I posted this one. We got to talk. And I'm loving it, man. So if I refresh right now my X, what I'm going to see, oh, look at this. I mean, Brad Garlinghouse is also posting super crazy. My man 21, the roadmap for crypto.com. It's just insane. It's literally just insane right now. So we love it. A lot of people, I think, it's always good to see my entire crypto community and the whole Web3 very active. We want to be very active right now. So breaking news, guys, FOMC is coming in and people are excited. There you go. There you go. There you go. So I'm very, very nice and happy for that. We got some positions there. So just as far as holding the line, which should be very good to see some nice returns, guys. Just what it is. Any questions, any comments, just put it in the chat and we'll go ahead and address them, guys. I know so many of you couldn't be more happy to see what's going on in our space. But let's be honest, guys. We knew this was going to happen. Let's be completely honest with you. Let's just cut the political correctness, okay? I knew this was going to happen. I wasn't bluffing. I wasn't joking. I wasn't making myself be a clown. No, guys. I know for a lot of people was cheesy and repetitive and frustrating to see a guy make videos when everything is crashing. I know people told me all kinds of things that I won't say right here, but where are those now? Where are those people now? Guys, we made it. See? It's the way that humans work. You gotta see to believe. So thankfully, I have a great community like you guys, and I believe that we're about to witness history. We're about to witness history for sure. And I just super happy and blessed to have you guys always supporting here, especially on YouTube. You also have X guys. We survived since 15,000 Bitcoin price. Let me ask you something, guys. Like this video if you watch the HBO Max special Bitcoin Money movie. Guess who was in that movie for a few clips, for a few seconds? Yours truly. They took my reaction once Bitcoin dropped to 15,000. I made my reactions organic. That's me. And I was like, wow, 15,000, bro. So I'll tell you guys, now it's going to be a different reaction. As always, my man Josh coming in and dropping incredible memberships to awesome members right here. Welcome, guys. Happy to have you. If you're not a member, you can always join in. There's all kinds of different emojis for you, so thank you for the support. So, guys, like I'm saying, we're not messing around right now. We're now in a really great position. People who were FUDing are no longer FUDing, and I think it's all because of great leaders in the industry. I am not one of those leaders. Let me make sure you understand that. Leaders like Elon Musk, leaders like Brian Armstrong, leaders like Chris Marsalek, Crypto.com CEO, leaders like Brad Garlinghouse, leaders like CC. CC's back. Guys, are you happy for CC? He's back. So yes, guys, I think, how high are we gonna go, guys? How hard are we gonna go? Honestly, I am just wondering that question every single day that we go. Thank you so much, Josh, for all the kind donations, buddy. I appreciate it. Thank you. What do you miss? You haven't missed anything, guys. You haven't missed anything. Let's go ahead and get to 1,000 viewers right now. All I ask is that if you're having fun with me, well, smash the like button, guys. Subscribe to the channel. We are reaching 100,000 subscribers by the end of the year. I don't know. I said I don't think so, but I can be proven wrong because of my community right here. So if you want to help the cause, if you're liking what you're hearing, guys, then do us a favor and help us get there. Because I've said many times, and I'm going to keep saying it, I am going to give money. I am going to thank you guys with a nice giveaway stream. I'm going to give a giveaway stream once we hit $100,000 in showing support and appreciation, guys. We'll give you some delicious money. So we got to get there to that level to do so, guys. So just wanted to make sure that you are once again aware. Thank you so much, Touch. Appreciate it. Good evening, guys. Good evening. About 2 minutes to go. About 2 minutes to go to get there, guys. And I just love this one. We got to talk. That's really cool. Like if you believe. Like if you believe. And it is coming up, guys. It is coming up. We love it. We believe in Crow. We believe in all different tokens because we got compliance and the right people right now. And in the US, we are going to make crypto great again. We're going to have an amazing crypto capital of the world right now, guys. I'm so ready to see it. I'm so ready to see it. For sure, guys. Honestly. About 1 minute to go, guys. 1 minute. 1 minute to go for the decision. So let's go ahead and start. FOMC. It's coming. FOMC. It's coming. 25 basis cut. It's coming. It's coming. If you're ready, let's see what the effect in real time is going to be for BTC, for the price of BTC, guys. It might be very, very good. Merry pumping. Oh, yes. 1 p.m. There it is. And the result is cut rate 25. I see the first one. Federal Reserve cuts rates by 25 to 450% to 475%. Fed rate interest rate decision decided to cut. Breaking Fed cut rates by 25 basis points. Everybody, as expected. As expected. We got something that a lot of people were waiting for. As expected. 25. There it is. Breaking crypto news, guys. The Federal Reserve, the FOMC committee under Chairman Gary Gensler has cut the federal funds rate by 25 basis points. I'm expecting some sell-offs because people want to liquidate a lot of other people. That's something you got to know. But just let them liquidate. Let them liquidate right now. Let them liquidate. The price will come back up as we're waiting for really, really good news for sure. That is really nice, man. It's going to be really, really good. Let me see. Yes. I mean, I'm getting all kinds of notifications right now. Or Ramos, yes. That's me. Perfect. Let him liquidate. I know, right? I mean, that's what's going to happen right now. But we're adding more positions right here, guys. Let's go to Watch a Guru. They're going to have it right now officially. There it is. There's a statement. Let's open up the statement right now. Let's go ahead and repost Watch a Guru. No need to post it. I mean, Watch a Guru is enough. Here it is, everybody. Let's go ahead and take a look here, all of us together. Welcome, guys. Please do me a favor and smash your like button, subscribe to the channel. Turn on those notification bells, guys. We are watching soon the FOMC. And what I'm about to do for you is let's go ahead and digest this issue statement that I think a lot of people want to see. And perfect. Received. Perfect stuff. Recent indicators suggest that the economic activity has continued to expand at a solid pace. Since earlier this year, labor market conditions have generally eased and the unemployment rate has moved up, remaining low. So the committee seeks to achieve maximum unemployment and inflation at the rate of 2%, which means that we're still on that way, right? We're still going down, and we're going to be having another CPI data reading pretty soon. The committee judges that the risk of achieving its employment and inflation goals are roughly in balance. The economic outlook is uncertain, and the committee is attentive to the risk to both sides of dual mandate. In support of its goals, the committee decided to lower the target rate for the federal funds rate 1.25 percentage point to 4.5 to 4.75%, considering additional adjustments to the target rate for the federal funds rate. So, guys, Donald Trump, from everything that I've heard, because I know, I mean, we heard so many speeches. I know that he said, we're going to bring inflation down. Everybody's saying bringing inflation down, right? That's something that is very common knowledge. Well, to bring inflation down, they got to make sure that the CPI, it's showing that in the reading for core inflation. So we'll be hearing another reading later on this month, and we'll keep you updated with that. But this one, it's just making it easier for people to borrow money, right? Houses, loans, personal money and loans. I mean, it just reactivates the economy. So if you're bullish on this new administration coming in from that angle, then they're going to be having a really nice, strong, I believe, economy way to just send it. So this is going to help a lot, guys. And when it comes to crypto, when it comes to Bitcoin, well, yeah, you can only know where we're going to head from here. We're probably going to be heading upwards. So very happy to see this, guys. Definitely. Shout out to my man, Zach. Definitely. Let's go ahead and keep an eye on everything, guys. Right now, it's going to be amazing. We have a 76,001%. Oh, by the way, Ethereum is doing really nice. Ethereum is doing really nice. And I got to tell you, we're so excited to see that, guys. So let's go ahead and continue watching Cronos, putting some pretty nice position numbers. And let's go ahead and take a look at the price of BTC because I want to make sure I don't miss anything on this one. Sigma, what's going on, buddy? Welcome. That is exciting. 25 rate cuts. Yes, we had it. Yes, we had it. Hello, Oscar and Chad. Can Ethereum explode in 2025? Yes, it can. Yes, it can, and yes, it will. So get ready for that, my friend, because we are soon to send, and you really don't want to miss it. But you are in the right place at the right time right now. You're in the right place at the right time, and we're not going to be letting anybody behind. So just make sure that you open some positions, okay? That's why I have my links down below, guys. And go ahead and immediately join Margex, which is the first link down below, up to 10,000 welcome bonus in your deposits. And what I'm using on my trading view is called the PPF indicator. I created that one in collaboration with Loxalgo. It's one of the best indicator companies. So it is the second link down below if you're interested, if you kind of want to give it a try to something new. So be my guest. Be my guest. You got 30 days risk-free. If you don't like it, get your money back. If you like it, thanks for supporting. Basically what it is. Australia's watching. Australia's watching. All right. Maneki. There's a lot of new tokens that are pumping. So let's go ahead and give them a look right now as we wait for the FOMC, everybody. Let's go ahead and wait for the FOMC right now. There's a lot of things going on. So these are some of the plays that I'm watching. Some of them I'm in, and I'm seeing an array of green starting with Crow ID, Corgi AI push, and these are all of them, right? We got Tron, we got Solana, we got Cronos. This is really good. The market, it's starting to move, and that is music to our ears. That is exactly what we needed to hear, guys. That's nice. Oh, man. Don't you like it, guys? Honestly, don't you like it? Nairo is right now the one that is winning a little bit more. Let's go ahead and take a look at the bubbles. I always love to see the bubbles, guys. Check this out. We're looking at the today. Yeah, let's go ahead and look at today. So that's one of the things. Let me go ahead and change to the top 100. Right now, Goat and Nairo are the ones that are leading as meme coins go. And we're going to go ahead and take a look at the I know people like the meme coins, so look at these ones. Mudang, Maneki is doing well. Cerebro is doing well. Sundog. So just wanted to make sure that you are up to date with what really is making people money. What really is making people money, and those are your charts, guys. Those are your charts. But Bitcoin, it is still at 76.5. So I will say, don't even sleep on Bitcoin, guys, for sure. Welcome. Very happy to have you here. To all my members, subscribers, guys. Let's go. That's exactly what I wanted to hear, guys. We're about to be listening to the FOMC chairman. We have Jerome Powell soon. But I just wanted to mention, guys, that right now, in the month of November, we are starting to see new all-time highs. So what that means is, now that we've broken 73.5, which was our most recent all-time high for a long time, where are we going to stop? Because we know $100,000 Bitcoin is just a matter of time. But I was saying that right before the election, but it seems that things have changed. It seems that we are not seeing 60,000 Bitcoin again. That is concerning for some bears. That is pretty concerning for some people who are still in the hopes of buying more Bitcoin at a cheap price. I bought some Bitcoin before this rally because I just wanted to. Like I think I wasn't doing a bad move because I knew I was coming. With this 25 basis point, guys, only thing I'm telling you is be ready. There's definitely a lot more money to be made, and there's trillions of dollars on the sidelines. You don't believe me? Then watch this. Chris Marsalek, the one and only Crypto.com CEO. Take a look at what he said. It's not me. It's not me. It is Chris Marsalek, CEO of one of the biggest crypto companies in the world. While in the big scheme of things, it doesn't really matter, it's worth noting that there's $3 to $4 trillion sitting on the sidelines, waiting for a moment of clarity. And I'm going to tell you something really, really important, guys. Listen to me just for 1 second. BlackRock, they haven't filed an XRP ETF yet. They will do it. When that happens, to the moon. When Gary Gensler gets fired, to the moon. When the appeal and all those lawsuits get thrown away, to the moon. What are you waiting for? What are you waiting for? To see BTC at 90,000? To see Cronos at 20 cents? To see Shiba Inu at 404 once again? What are you waiting for? That's what it is, guys. And I'm so happy that we're seeing the mat. Even Jasmy is doing well, which we really like, guys. Right now, everybody is. Let me show you this one from Brad Garlinghouse. He posted today this one. If you needed even clearer evidence that the crypto voter is alive and well, here's the data. I hope the Dems find a way to hold Gary Gensler accountable for ignoring the law. Incredible stuff. Deaton outperformed because Deaton, right, the one who was trying to get Elizabeth Warren out of the race, she won, but still putting a great fight. We're excited, fam, for sure. Slabo in the house. What's going on, man? Happy to see you. Happy to see you, man. Welcome. Leandro in the house. Welcome, buddy. Happy to see you. Welcome. Might sound crazy, but I see Bitcoin at $1 million. Insane, right? When Donald Trump sits in that chair, to the moon. He takes the oath of office January the 20th. At that time, on that date, everything starts on a countdown. You got 4 years. Donald J. Trump, you got 4 years. What are you going to deliver for us? You got 4 years. Go. January the 20th. 4 years. Go. And first thing that he's going to do, okay? Gary Gensler, if he hasn't resigned yet, goodbye, buddy. That immediately pumps the price to the moon. That one alone is going to do really well for us. All right, fam, about 15 more minutes for to watch and enjoy Jerome Powell and everybody getting really crazy. So I just want to make sure that you're aware and ready for what's to come, because for sure you don't want to miss it. You don't want to miss it, guys. You don't want to miss it. Please don't miss it. Stay with me. Stay with us. We got excellent members. We got excellent moderators. We got excellent community right now. All the questions, comments you have. And I mean, I know I got a lot of people from all different countries. Like, you guys, are you excited for what's going to happen here in the US? I'm pretty sure you are. I've seen the TikToks. I've seen the X videos. I've seen everything. So it's super nice. Look at what Crypto.com just tweet. Look at what Crypto.com just tweet. We're going to make it. Oh, yes. What? Oh, yeah. Inevitable. Thank you, Grammarly. Grammarly comes to my rescue every single time. There you go. Boom. There you go. This is exciting, man. This is exciting. Shout out to my man Black. 25 basis Breaking US federal cuts rates by 25. Correct. Oh boy. Here we go, guys. So that was a nice drop on the price of Bitcoin, but we still continue in a nice uptrend. We continue in a nice uptrend, which we really like. You know, we got some time. I think we deserve a little bit of passion right now. And I see some of you guys telling me, so why not? I think we all deserve some really nice, delicious tunes. Give me one beautiful second. This one is going to be with a special note to all my fam crazy guys. To you. Let's go ahead and play this beauty. There it is. Just a little bit of a touch-up. Welcome, everybody. Oscar Ramos Live. Special FOMC. We're always here, delivering greatness for you. Making some trades. Getting in, getting out. Getting some positions in and out. Right now, CRO is leading my entire portfolio right now of in my watch list. Leading everything. So cool. DJ Oscar, you know me, buddy. You know me. We got PEPE at 5%. We got Ethereum at 5%. Shiba Inu, it's kind of holding a little bit. Helen in the house, welcome. Finland, welcome. What's going on, guys? Watch live. Yep, less than 15 minutes to go. And that's it. Awesome. Nice. So, my XRP position is now green. What I'm doing right now with my trades, guys, is long going in at 5 to 10x. I'm not really opening too many 100x per se. What I'm doing right now is, you know what? Before Gary Gensler gets fired, I need to see my XRP portfolio balloon. So that's what I'm doing. Look at all the positions that we have. Bitcoin, Ethereum, Dogecoin, PEPE, and these are all hot. Like, there's a lot of people trading them. A lot of people trading. So I want you guys to join me. First link down below. You gotta go ahead and start trading on Margex, guys. And by the way, I just remember one thing. Here it is. You can... My team got me this email because I know I got a lot of people, friends here trading on Margex because of me. I'm going to put this in the chat. Here it is. Guys, that's the email. That's what my team sent me. So if you got a question, for Margex, use that email. Okay? Please. That's gonna be what you need to do. Please. So if you have a question, if there's something not working on, then use that email. That's gonna help you a lot. Just want to make sure that you are taken care of while you use the platform, right? So that's pretty much what it is. Perfect. Almost there. Getting closer. Looking at the price of BTC right now, guys, as you're seeing on the other side of the screen. Let's see what's going on. What is going on? Texas in the house. Welcome. Looking at the 15-minute chart, everything and the whole deal we're watching. If we see some retracements, welcome each and every one of them. Every single one of them. We buying the blood on the streets. We buy when people are flooding. Always. It's much better than getting in when the FOMO is occurring. Just what it is. Hmm. 2024 election precedent. Seems that this is the final one. Donald Trump said, oh, that was a few days ago. Perfect. Taking a look at the latest. Bitcoin hits new all-time highs at 76,700. Now this is our all-time high right now. 76,720 bucks, guys. Isn't that crazy? To the moon, guys. To the moon. That's nice, guys. And we start seeing some meme consults doing pretty well, which I like that too. I'm gonna go ahead and refresh this one. Seems that it's rugged on me. Okay, there you go. That's much better. Watch live, November 7th. Solana looking nice. That's really good. I still hold Tectonic. I still hold BVS Finance. Those are some Web3 utility tokens that for sure need some time in the market. And we're gonna go ahead and take a look at them. They take some time, guys. So I'm not really rushing much in those ones. If you are on X, guys, if you want to follow this stream, if you want to go ahead and join my community here on X completely for free, you just have to click follow. There's the link in the chat right now. Jump over. Come on in. I got a lot of different things for you. Different news, breaking stories. I love it, guys. Sometimes I update my community here on X because, you know, there's all kinds of places. Making a tweet is much easier than making a video, as you can tell. More and more people coming into this one too. Perfect. Just about 8 minutes to go and we should be hearing from them. Once we start, I'll mute and we'll enjoy about 30 to 40 minutes. That's usually how long it lasts. And after that, we go ahead and give up a summary and I will wrap up. We're ready, guys. We're honestly super ready. So don't go anywhere, guys. Laura, what's going on, Laura from the UK? Been watching and following you forever. Thank you so much for being here. What do you think about Gala? I am holding 0 right now, but I used to trade it a little bit more. Not into crypto gaming right now much. Not really into crypto gaming much. I got a lot of things that I'm focusing right now. Gala is not one of them. Yes, relax. I haven't talked about Tectonic or BVS in a long time. Right now, my interest is changing, but I'm still holding some tokens. Like I'm down. I'm not going to sell when I'm down, knowing that there's a bull market ahead. See what I'm saying? There's a bull market ahead, and I know I'm down, so I'm just got to be patient. I just want to be patient. That's it. I don't want to rush my decisions. There's no need to. There's really no need to for that. Because it's going to be okay, fam. That's one thing I know. It's all going to be fine as long as we, you know, start doing our own research. And when you buy what you can afford losing. That is it. Welcome to all the new subscribers. Happy to have you. Very exciting to see that 25 basis cut. I haven't opened this one in a while, so let me open this for 1 second. Where is it? No, where is it? It was somewhere here. Oh, here. There you go. This is for my CPI. So, the core inflation rate, 3, right? They are looking for 2%. 2%. So we need this 3.3 to come down again to 3%, low 3%, 3.1. That's what's going to be good for us. The next one is coming soon on the 13th. So in about, less than a week away. Next week is coming up. So this should be good. This 25% rate cut, let's see how much it's going to affect the core inflation rate. That's what we need down because, let me see. I need to open up to, can I see it? No. Okay, here it is. CPI, we need the inflation year over year. Here it is. Oh no, import prices. No, I need the inflation. Here it is. Inflation rate year over year. So right now we are at 2.4%. The 3%, 3.9 inflation rate. So we need to come down for sure. Tommy Dragon, welcome. Happy to see you. Happy to see you guys. Price of BTC is still holding the line at $76,000. Isn't that cool? We want that, guys. $76,000 is good for us. Good for the entire community. The only thing I'm going to tell you is good for crypto. We want good things for our crypto industry, guys. So let's go. Send it. And welcome the tunes. We always love the tunes, guys, for sure. I so much love this one. I don't know why. No. Tommy, it already happened, buddy. 25 basis. 25 points. It already happened. Lemon in the house. What's going on, baby? 3 more minutes. 3 more delicious minutes and that's it, guys. Almost there. We're going to be watching and enjoying ourselves. Some pretty cool stuff. What a good one, fam. It's always good to see when you're making cash, right? Labo in the house. Thank you, buddy. Appreciate it. When is the altcoin season? Now is the Bitcoin season. It's starting the Bitcoin season. The altcoin season should be around 2025. But I am not buying during the altcoin season. I gotta make sure to accumulate before it happens because the altcoin season is to sell more than to buy. It's to get out and enjoy the profits, to move money around and see where you can park your stable coins. That's what the altcoin season for. That is what it is. All right, let's go ahead and close this. That was some nice music, buffer music, guys. If you enjoyed that, you know what to do. Appreciate it. Cheers to everyone. And we're about to witness right now live what's popping on the committees. Let's go to live. Waiting. But it's coming soon. Is it possible to do a multi-trillion burn or increase the burn rate on their transactions? Well, Derek, if you find somebody who is willing to burn $25 million, then send them my channel so I can at least make a video about them. Right now, it is about $25 to $27 million for 1 trillion Shiba Inu. I can almost guarantee you're not going to find anybody who's willing to do that. That's why we're not going to be finding anybody. So what Shibarium and the entire community for Shiba Inu is about is letting the community do it. Okay, everybody, happy to have you. We're about to start. If you're ready, I'm about to get quiet, muted. We're about to listen. Smash the like button, subscribe to the channel, and enjoy. We'll be hearing from Chair Powell in a few seconds. Perfect. Here it is. Let's go.
Good afternoon. My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. The economy is strong overall and has made significant progress toward our goals over the past 2 years. The labor market has cooled from its formerly overheated state and remains solid. Inflation has eased substantially from a peak of 7% to 2.1% as of September. We are committed to maintaining our economy's strength by supporting maximum employment and returning inflation to our 2% goal. Today, the FOMC decided to take another step in reducing the degree of policy restraint by lowering our policy interest rate by a 1/4 percentage point. We continue to be confident that with an appropriate recalibration of our policy stance, strength in the economy and the labor market can be maintained, with inflation moving sustainably down to 2%. We also decided to continue to reduce our securities holdings. I'll have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that economic activity has continued to expand at a solid pace. GDP rose at an annual rate of 2.8% in the third quarter, about the same pace as in the second quarter. Growth of consumer spending has remained resilient, and investment in equipment and intangibles has strengthened. In contrast, activity in the housing sector has been weak. Overall, improving supply conditions have supported the strong performance of the U.S. economy over the past year. In the labor market, conditions remain solid. Payroll job gains have slowed from earlier in the year, averaging 104,000 per month over the past 3 months. This figure would have been somewhat higher were it not for the effects of labor strikes and hurricanes on employment in October. Regarding the hurricanes, let me extend our sympathies to all the families, businesses, and communities who have been harmed by these devastating storms. The unemployment rate is notably higher than it was a year ago, but it has edged down over the past 3 months and remains low at 4.1% in October. Nominal wage growth has eased over the past year, and the jobs-to-workers gap has narrowed. Overall, a broad set of indicators suggest that conditions in the labor market are now less tight than just before the pandemic in 2019. The labor market is not a source of significant inflationary pressures. Inflation has eased significantly over the past 2 years. Total PCE prices rose 2.1% over the 12 months ending in September, excluding the volatile food and energy categories. Core PCE prices rose 2.7%. Overall, inflation has moved much closer to our 2% longer run goal, but core inflation remains somewhat elevated. Longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. We see the risks to achieving our employment and inflation goals as being roughly in balance, and we're attentive to the risks to both sides of our mandate. At today's meeting, the committee decided to lower the target range for the federal funds rate by a 1/4 percentage point to 4.5% to 4.75%. This further recalibration of our policy stance will help maintain the strength of the economy and the labor market and will continue to enable further progress on inflation as we move toward a more neutral stance over time. We know that reducing policy restraint too quickly could hinder progress on inflation. At the same time, reducing policy restraint too slowly could unduly weaken economic activity and employment. In considering additional adjustments to the target range for the federal funds rate, the committee will carefully assess incoming data, the evolving outlook, and the balance of risks. We are not on any preset course. We will continue to make our decisions meeting by meeting. As the economy evolves, monetary policy will adjust in order to best promote our maximum employment and price stability goals. If the economy remains strong and inflation is not sustainably moving toward 2%, we can dial back policy restraint more slowly. If the labor market were to weaken unexpectedly, or inflation were to fall more quickly than anticipated, we can move more quickly. Policy is well positioned to deal with the risks and uncertainties that we face in pursuing both sides of our dual mandate. The Fed has been assigned two goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing inflation sustainably to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to our discussion.
Thank you. Given the expectation that the election outcome will produce policies that would meaningfully impact the U.S. economy next year, how is the committee taking these proposals into account for upcoming decisions, including potentially the next one in December? And can you give us any more sense of how proactive or reactive the Fed is prepared to be to changes in economic policies with the next administration?
Sure. So let me say that in the near term, the election will have no effects on our policy decisions. As you know, many things affect the economy, and anyone who writes down forecasts in their job will tell you that the economy is quite difficult to forecast looking out past the very near term. Here, we don't know what the timing and substance of any policy changes will be. We therefore don't know what the effects on the economy would be, specifically whether and to what extent those policies would matter for the achievement of our goal variables, maximum employment and price stability. We don't guess, we don't speculate, and we don't assume. Now, just in principle, it's possible that any administration's policies or policies put in place by Congress could have economic effects that over time that would matter for our pursuit of our dual mandate goals. So we, along with countless other factors, forecasts of those economic effects would be included in our models of the economy and would be taken into account through that channel.
Nick.
Chair Powell, Nick Timros from the Wall Street Journal. Roughly 1 year ago, when the 10-year Treasury was flirting with 5% and 30-year mortgage rates were near 8%, you noted how higher borrowing costs, if they were sustained, could weigh on economic activity. Given that you've said you believe policy is restrictive and the Fed is now dialing back that restriction, are the growth risks presented by higher U.S. Treasury yields today any different from those you identified 1 year ago when inflation was still meaningfully above your target?
So I would just say this: we've watched the run-up in bond rates, and it's nowhere near where it was, of course, a year ago. I guess the long bond rates are well below that level. So we're watching that. Things have been moving around, and we'll see where they settle. I think it's too early to really say where they settle. Ultimately, I'm sure we've all read these decompositions of what, and I certainly have, but it's not really our job to provide our specific decomposition. I will say, though, that it appears that the moves are not principally about higher inflation expectations. They're really about a sense of more likelihood of stronger growth and perhaps less in the way of downside risks. So that's what they're about. We do take financial conditions into account if they're persistent and if they're material. Then we'll certainly take them into account in our policy. But I would say we're not at that stage right now. It's just something that we're watching. And again, these things, don't really have mainly to do with Fed policy, but to do with other factors in the economy.
If I could follow up, is the September SEP, are those rate projections still valid? Do they still seem relevant given where we are now?
You know, you get halfway through the cycle between the last set and the next set. I wouldn't want to comment one way or the other. You know, let's talk about the data we've gotten since the last meeting. So in the main, the economic activity data have been stronger than expected. The NIPA revision was stronger. Certainly the September employment report was stronger. The October report, not stronger. Retail sales stronger. So overall, though, I think you take away a sense of some of the downside risks to economic activity having been diminished with the NIPA revisions in particular. And so overall feeling good about economic activity. So I think we would factor that in. At the same time, we got one inflation report, which it wasn't terrible, but it was a little higher than expected. So I think really the question is December, and you know, by December we'll have more data. I guess one more employment report, two more inflation reports, and lots of other data, and you know, we'll make a decision as we get to December.
Gina Smilik from the New York Times. Thanks for taking our questions, Chair Powell. When it comes to December, what will you be looking at specifically as you try to make that decision? And then as of the Fed's economic projections in September, you had written down 4 quarter-point interest rate cuts in 2025. Do you still think that those are likely? Is that sort of the baseline outlook at this point, or has that shifted? And if it shifted at all, can you give a little bit of detail as to why?
You know, we don't fill out an SEP, and I can't characterize one that wasn't filled out today. So I can't really speak for kind of exactly where the committee is. I will just say for December, we're going to be, again, at every meeting, we're going to be looking at the incoming data and how that affects the outlook. As you know, we're in the process of recalibrating from a fairly restrictive level at 5.33%. After today's move, we're down 75 basis points. And we're asking ourselves, is that where we need to be? You know that we're trying to steer between the risk of moving too quickly and perhaps undermining our progress on inflation, or moving too slowly and allowing the labor market to weaken too much. We're trying to be on a middle path where we can maintain the strength in the labor market while also enabling further progress on inflation. We think that's where we are, but that's the question we're going to be asking in September. And in other meetings. And again, I can't really update you on the committee's thinking because we don't fill out an SEP at this meeting.
Yeah, totally appreciate that. I guess when it comes to your own thinking, do you think that a full percentage point of rate cuts in 2025 is a reasonable outlook?
Again, we're going to wait and see how things come in December. I mean, it's just, I would put it this way. We're on a path to a more neutral stance. And that's very much what we're on. That has not changed at all since September. You know, we're just going to have to see where the data lead us. We have, you know, a whole 6 weeks of data to look at to make that decision in December. Obviously, I'm not ruling it out or in, but you know, I would say, you know, I would say that. You know, again, we didn't update the SEP, so I'm not going to characterize, you know, where the committee would be.
Howard.
Thanks, Howard Schneider with Reuters. I wondered if you could please elaborate, explain a little bit the 2 changes in the language of the statement here. In the first paragraph, when you say inflation has made progress, dropping the word further progress. And in the second paragraph, dropping the sentence that the committee had gained greater confidence that inflation was progressing towards its 2% goal. Is there any policy substance behind either of those changes in language? Is it meant to open the door to a December pause? Is it meant to communicate anything about the stickiness of core inflation the last 3 months?
Not really, no. So let me tell you what we were thinking. So the test of gaining further confidence was our test for the first rate cut, right? And so we met that test in September, and therefore we take that test out. If you leave it in, then it's new forward guidance. It's brand new forward guidance. What do you mean by it? Are you requiring yet further? We have to say yes or no at every meeting whether we've made further progress. The point is we have gained confidence that we're on a sustainable path down to 2%. So that I would tell you is what that's really all about. It's not meant to send a signal. Neither of those is meant to send a further signal. And saying further progress, it becomes a test. We don't want to be. We don't think it's a good time to be doing a lot of forward guidance. There's a fair amount of uncertainty in that. In what I've said, the path that we're on, we do know where the destination is, but we don't know the right pace, and we don't know exactly where the destination is. So the point is to find the right pace and the right destination as we go. And I think there's a fair amount of uncertainty about that. And you don't want to tie yourself up with guidance. You want to be able to make sensible decisions as you go.
Steve Leisman, CNBC. Mr. Chairman, you talked about higher rates, perhaps from an expectation of higher growth. You didn't talk about it in terms of expectations of higher deficits. Is that something you think might be behind the recent rise in interest rates, and are rising deficits a concern to you?
So we don't comment on fiscal policy, and again, I don't have a lot more to say on what's driving bond yields. In terms of policy changes, though, let me give you a sense of how this works in the ordinary case. Let's say Congress is considering a rewrite of the tax laws. Doesn't matter what's in the content. So we would follow that. At a certain point, we'd think we see the outline, so we'd start to model it. And then we'd wait, and then at a certain point, the staff would brief the FOMC and say, these are the likely effects. There's lots and lots of literature on the effects of tax policy changes on various parts of the economy. So we'd try to get smart on that, and then the law actually passes. And you'd start to put it. You'd probably run an alternative simulation before that happens, just to keep people trying to understand it. Then when it actually passes, it goes into the model, along with a million other things. So, we have a very large economy. Many things are affecting it at any given time, and a law change of some kind would go in there, but it would go in. But it would, it's a process that takes some time. Clearly, the legislative process takes a lot of time. And of course, the real question is not the effect of that law. It's all of the policy changes that are happening. What's the net effect? And the overall effect on the economy at any given time. So I think that's a process that takes a lot of time and that we go through all the time with every administration, constantly. And this will be no different. But right now there's nothing to model right now. It's such an early stage. We don't know what the policies are, and once we know what they are, we won't have a sense of when they'll be implemented or all those sorts of things. So I think I would just say we're not doing that now, and all that will take time, and it will be very much regular order when we do that.
If I could just follow up on Nick's question, are the current rates something you feel like you need to lean against, in that they go against the direction of policy by adding restrictions to the economy, or do you just take them as a given and perhaps a signal that you should do less?
Look, I just think the first question is, how long will they be sustained? If you remember the 5% 10-year, people were drawing massively important conclusions, only to find, 3 weeks later, the 10-year was 50 basis points lower. So, it's material changes in financial conditions that last, that are persistent, that really matter. And we don't know that about these. What we've seen so far, we're watching it, we're reading, we're doing the decompositions and reading others, but right now it's not a major factor in how we're thinking about things.
Chris.
Thank you, Chris Rugaber at Associated Press. You mentioned the positive economic data that we've seen since the September meeting, including the revisions to things like savings, higher GDP growth. We saw stock market jump yesterday. That's renewed some of the questions about why do many cuts at all in this with this backdrop.
So you're right. As I mentioned, and as you mentioned, the latest economic data have been strong, and that's, of course, a great thing and highly welcome. But, of course, our mandate is maximum employment and price stability, and we think that even with today's cut, policy is still restrictive, We understand it's not possible to say precisely how restrictive, but we feel that it is still restrictive. And if you look at our goal variables, the labor market has cooled a great deal from its overheated state of 2 years ago and is now essentially in balance. It is continuing to cool, albeit at a modest rate, and we don't need further cooling, we don't think, to achieve our inflation mandate. So that's the labor market. Inflation has moved down a great deal from its highs of 2 years ago, and we judged, as I mentioned, that it's on a sustainable path back to 2%. So the job's not done on inflation. But if you look at those two things, we judged in September that it was appropriate to begin to recalibrate our policy stance to reflect this progress, and today's decision is really another step in that process. Overall, as I mentioned, we believe that with an appropriate recalibration of our policy stance, we can maintain strength in the labor market even as our policy stance enables further progress toward our inflation goal.
Great. And just to follow up, what might cause you to pause rate cuts in December? What kind of economic data would lead you to that path? Thank you.
So we haven't, made any decision like that at all. But we're in the process, as I mentioned, of moving policy down, our stance down over time to more neutral level. And as a general matter, as we move ahead, we are prepared to adjust our assessments of the appropriate pace and destination as the outlook evolves. So, for example, if we were to see the labor market deteriorating, we'd be prepared to move more quickly. Alternatively, as we approach levels that are plausibly neutral or close to neutral, it may turn out to be appropriate to slow the pace at which we're dialing back restriction. Again, haven't made any decisions about that, but that's certainly a possibility. If you can think of it as similar to what we do with asset with asset runoff, with QT. So we reach a point where we slow the pace, much like an airplane reaching the airport slows down. And so we're thinking about it that way, but it's something that we're just beginning to think about.
Edward.
Thanks, Chair Powell. So with the noise in the jobs reports that we've seen, and you look at the Fed's favorite inflation, PCE inflation, overall it's 2.1%, very close to the Fed's target, but core inflation is 2.7%, and it's been that way since July. So why doesn't this data give fuel to a rate pause for this meeting?
Well, so I think if you look at the 3 and 6 month, you're quoting the 12-month. So yes, we look at all of them, right? But if you look at 3 and 6 month core PCE, you'll see they're around 2.3%. So we look at all of them, and we also look at 12 as well. But what it's telling us is that we really have made significant progress, and we expect there to be bumps. For example, the last 3 months of last year, the core PCE readings were very, very low, probably unsustainably low. So that's why forecasts generally see a couple of upticks toward the end of the year. On the other hand, the January reading certainly looks like an example of residual seasonality, so that we saw last year. So when that falls out of the 12-month calculation in February, we should see a thing down. So it'll literally be a bump up and then down. We understand that. Overall, you see the progress on inflation, and you also look at the economy and you say, what is the inflation story now? Where's it coming from? So I point to a couple of things. One is the non-housing services and goods, which together make up 80% of the core PCE index, are back to the levels they were at the last time we had sustained 2% inflation, which happens to be in the early 2000s for a period of 5, 6, 7 years. So they're back to that level. What's not is housing services. So let's talk about housing services. Housing services is higher. What's going on there is, market rents, newly signed leases are experiencing very low inflation. And what's happening is older, leases that are turning over are taking several years to catch up to where market leases are, market rent leases are. So that's just a catch-up problem. It's not really reflecting current inflationary pressures. It's reflecting past inflationary pressures. So that's one thing. The other thing is, I'd say look at the labor market, not a source of inflationary pressures. Where's it coming from? It's not a very tight economy. What is the story about inflation? You see that catch-up inflation also in insurance and several other areas. So you're seeing We're not declaring victory, obviously, but we feel like the story is very consistent with inflation continuing to come down on a bumpy path over the next couple of years and settling around 2%. That story is intact, and it won't be one or two really good data months or bad data months aren't going to really change the pattern at this point now that we're this far into the process.
So you're quickly trying to get to that neutral rate that you see, or do you foresee that you have some time to get there?
Nothing in the economic data suggests that the committee has any need to be in a hurry to get there. We are seeing strong economic activity. We are seeing ongoing strength in the labor market. We're watching that carefully, but we do see maintaining strength there. And so we think that the right way to find neutral, if you will, is carefully, patiently. Again, that's not meant to have a specific meaning, other than to the extent the economy remains strong, we have the ability to take advantage of that as we try to navigate that middle path between the two risks.
Craig.
Hi, Chair Powell. Craig Torres from Bloomberg. Two questions today. Did you learn anything about what Americans think about the economy from the election results? First question. Second question. I want to talk about some labor market indicators, and I do so with great respect for your attentiveness to the maximum employment side of the mandate, Chair Powell. So the unemployment rate has been at 4% or higher for 6 months. One of the broadest measures of unemployment is up about 0.5 point from a year ago. Compensation gains are sliding back. The quits rate, a signal of labor market dynamism, has been heading down to that bad neighborhood of the 20 teens. So you have put a marker at Jackson Hole saying any further cooling is unwelcome. It is cooling generally a little bit further. So at what point do we reach what you would describe as a shortfall from maximum employment? Thank you.
Sure. So on your first question, I'm not going to talk about anything that relates directly or indirectly to the election. On the second one, this is the great question, and it's the one we think about all the time. So I'll just say a couple things. There's nothing really surprising here. What we know is that the unemployment rate is low. We also know that it's moved up significantly from a year or so ago. So we've seen a big change upward in unemployment. Sometimes that has meant bad things. So far, it doesn't appear to be. It appears that I wouldn't say that the labor market has fully stabilized, because I do think it's continuing to very gradually cool. But it seems to be in a good place, and our policy, of course, is designed to keep it in that good place, to maintain the strength in the labor market, while also enabling further progress on inflation. You mentioned a bunch of indicators, and you're right. The openings to unemployment rate is back to a normal level. I would characterize it more broadly as normalizing. You mentioned wages. Wages are still running just a bit above where they would need to be consistent with 2% inflation, unless productivity is going to remain at this high level. If we see productivity, more sustainably at these high levels, then that would sustain higher wage gains. So I would say, in fact, you can say it the other way, that wage increases are now consistent with 2% inflation, given current productivity readings. But of course, the lore on productivity readings is whenever you see high readings, you should assume they're going to revert pretty quickly to the longer-term trend. That has always been the case for 50 years. But it may be that we're now 5 years. If you look at the NIPA revisions that came out a month ago, we're 5 years into a nice set of productivity readings, which are sustained and very healthy. But overall, it's a good labor market. We could talk about 20 different data series. We'll be looking at all of them, of course. We don't want the labor market to soften much from here. We don't think we need that to happen to get inflation back to 2%.
Victoria.
Hi, Victoria Guido with Politico. Some of the president-elect's advisors have suggested that you should resign. If he asked you to leave, would you go?
No.
Can you follow up on, do you think that legally you're not required to leave?
No.
Mike?
Michael McKee from Bloomberg Radio and Television. You talk a lot about what the data are telling you and how you are dependent on the data, but in terms of forward-looking assessments of the economy, what are you hearing from CEOs or other officials around the country? What did you hear today from the regional bank presidents about what companies and consumers think about where the economy is going from here rather than looking backwards? And does that match up with what your forecasts have been and what you think the appropriate policy path should be?
So it's hard to characterize a really interesting set of discussions we had, and of course you'll see them in the minutes in 3 weeks. But I would say this: I think the comments from our Reserve Bank colleagues and from the CEOs that they talk to are pretty constructive on the economy right now. Pretty constructive, feeling that the labor market is back to normal, to the point where it's no longer that much a discussion topic in their worlds, whereas 2 years ago it was all they were talking about. So they feel like the labor market's in balance. People feel good about where the economy is. Demand is obviously pretty strong, and you're seeing 2.8% growth in the third quarter estimated. Maybe the year's 2.5%. This is a strong economy. It's actually remarkable how well the U.S. economy has been performing with strong growth, a strong labor market, inflation coming down. We're really performing better than any of our global peers, and I think that is reflected in what you hear from what I hear people hear from CEOs. I don't get to talk to a lot of CEOs in my job, but I hear what others summarize from those, and of course I hear the Reserve Bank presidents do a lot of that, and it's pretty constructive overall. Now, that's not to say there are areas of caution and things like that, but ultimately, overall, pretty positive.
Well, to follow up the areas of caution, if there were black clouds on the horizon that you identified as something you're watching, what would they be?
I think it's things like clearly geopolitical risks around the world are elevated, and just as clearly they've had relatively little effect on the U.S. economy. Now, that can change through the price of oil or otherwise, but people talk about those as something that's on the horizon all the time. But ultimately, if you look at the U.S. economy, its performance has been very good, and that's what we hear from business people, and expectation that will continue. If anything, people feel next year, I've heard this from several people, that next year could even be stronger than this year.
Andrew.
Hi, it's Andrew Ackerman with the Washington Post. I just wanted to follow up on the discussion earlier on fiscal policy. Your predecessors, Greenspan and Volcker, spoke up loudly when they thought large budget deficits endangered economic or financial stability. Will you do that too? And right now we're in a period of full employment. We have large budget deficits and debt at historic highs that are rising. Is that something you'd speak out against?
So, I have said many times, no more, no less than what the predecessors you mentioned have said. And what that is that the U.S. federal government's fiscal policy is on an unsustainable path. The level of our debt relative to the economy is not unsustainable. The path is unsustainable. And we see that in, you've got a very large deficit you're at full employment, and that's expected to continue. So it's important that we, that to be dealt with. It is ultimately a threat to the economy. Now, I can say that. I don't have oversight. We don't have oversight over fiscal policy. I've said it on many occasions, just said it again.
Okay, thank you. I guess the other question is, to follow up on Victoria's question, do you believe the president has the power to fire or demote you, and has the Fed determined the legality of a president demoting at will any of the other governors with leadership positions?
Not permitted under the law.
Not what?
Not permitted under the law.
Thank you.
Courtney.
Courtney Brown from Axios. In response to Howard's question, you said it wasn't an ideal time to give forward guidance because of the economic uncertainties. Can you lay out what some of those uncertainties are and whether or not it includes some of the proposals that the president-elect has put out on the campaign trail, tariffs, for instance?
No, I was not referring to the new administration's policies at all, nor will I today. So what I'm just saying is, as we look ahead, we know, and I mentioned this in my statement, that the risks are two-sided. I guess I should start by saying that we think that the economy and we think our policy are both in a very good place, And but as you look forward, you say, what are the risks? And one risk is that we would move too quickly and find ourselves having moved too quickly, and inflation comes back, and we lost our chance to get inflation back to 2%. So we have to avoid that risk, and to avoid that risk, that means you want to move carefully. The other risk is that we move too slowly, and that we allow the labor market to weaken too much and do unnecessary damage to the labor market and to people's working lives. That says don't get behind the curve. So these two things are the two risks that we have to manage, and so we're in the middle there. We try to be in the middle and deal with manage both of those. Again, the idea is to maintain, support the strength we have in the labor market and in the economy, but also with somewhat less restrictive but still restrictive policy, enable further progress toward our 2% inflation goal. This is a thing where we're meeting by meeting, we're going to be making our assessment of what the right path is. It's not as important, the precise timing of these things is not as important as the overall arc of them. And the arc of them is to move from where we are now to a sense of neutral, a more neutral policy. We don't know exactly where that is. We only know it by its works. We're pretty sure it's below where we are now. But as we move further, there will be more uncertainty about where that is, and we're going to move carefully as this goes on, so that we can increase the chances that we will get it right.
Simon.
Thank you, Chair Powell. Simon Rabinovich with The Economist. I know you don't want to share your decomposition of bond yields, but if you look at the break-evens, it is clear that longer-term inflation expectations do seem to have risen, up at about 2.5%, for example, on the 5-year. That's up half a point from when you cut in September. Do you have any concern at all that longer-term inflation expectations are de-anchoring, or put another way, are anchoring at a slightly higher level? Thanks.
So we would be concerned if we thought we saw longer-term inflation expectations anchoring at a higher level. That's not what we're seeing. We're still seeing, between surveys and market readings, broadly consistent with, I looked at the 5-year earlier today, and it's probably moved, but it's just not, it's kind of right where it's been, and also it's pretty close to consistent with 2% PCE inflation. So that's been a traditional one that we look at a lot. But overall, expectations seem to be, and really have throughout this, in a place that's consistent with 2% inflation. But you're right to say we watch that very carefully, and we will not allow inflation expectations to drift upward. But that's really why we reacted so sharply back in 2022, was to avoid that.
Kelly.
Hi, Chair Powell. Kelly O'Grady, CBS News. We just talked about what you've heard from business leaders on the economy, but many average Americans are still not feeling the strength of the economy in their wallets. So what's your message to them on when they might expect relief?
So you're right that we say the economy is performing well, and it is, but we also know that people are still feeling the effects of high prices, for example. And the world went through a global inflation shock, and inflation went up everywhere, and it stays with you because the price level doesn't come back down. So what that takes is, it takes some years of real wage gains for people to feel better. And that's what we're trying to create, and I think we're well on the road to creating that. Inflation has come way down, the economy is still strong here, wages are moving up, but at a sustainable level. So it's just, I think what needs to happen is happening, and for the most part has happened. but it'll be some time before people, regain their confidence and feel that. And, we don't tell people how to feel about the economy. We completely respect what they're feeling. Those feelings are true, they're accurate. We don't question them, we respect them.
And just a quick follow-up, President-elect Trump has been critical of your performance. Any concern about his influence on the Fed's independence?
I'm not going to get into any of the political things here today, but thank you.
Nancy. Hi, Chair Powell. Nancy Marshall-Genzer with Marketplace. What is your plan if we start to see stagflation?
Well, so that's the whole plan is not to have stagflation, so we don't have to deal with it. So that is actually our plan. It's of course a very difficult thing because anything you do with interest rates will hurt one side or the other, either the inflation mandate or the employment mandate. I would just say that we've been able to see inflation come down a whole lot, much closer to our goal, without the kind of sharp increase in unemployment that has often accompanied programs of disinflation. So, knock on wood, we've gotten this far without seeing a real weakening in the labor market, and we believe we can complete the inflation task while also keeping the labor market strong, and that, of course, is exactly what we're trying to do.
Can you rule out an interest rate hike next year?
No, I wouldn't rule anything out or in that far away, but that's certainly not our plan. I mean, our baseline expectation is that we'll continue to move gradually down towards neutral, that the economy will continue to grow at a healthy clip, and that the labor market will remain strong. If you look at our that will not change from the September SEP. That is our baseline forecast, and short of some exogenous event, that will continue to be our forecast for the foreseeable future. So. But ultimately, we're not in a world where we can afford to rule things out a full year in advance. There's just too much uncertainty in what we do.
Let's go to Jean for the last question.
Hi, Chair Powell. Jean Young with MNI Market News. I wanted to go back to a comment that you had made about Americans being quite unhappy about the cumulative price level rises over the past few years, even though now inflation is back on a path to 2%. Would it be appropriate for the Fed to undershoot for a while on its inflation goal under the average inflation targeting regime so people have a chance to catch up?
No, that's not the way our framework works. We're aiming for inflation at 2%. We did not think it would be appropriate to deliberately undershoot. And part of the problem there is that low inflation can be a problem too, in a way. But that's not part of our framework, and it's not something we're going to be looking at in our framework review. Thank you very much.
Everybody, what is happening, everybody, and welcome back to the channel. This was the November FOMC meeting. We got a 25 basis point cut by the FOMC committee. And all I'm going to tell you guys is, let's go bullish to the moon. Yeah, this is going to explode really nice. Smash the like button, guys. Subscribe to the channel. We really had so much fun right now. And I just want to say, from everything that I heard today, it's pretty dovish. You got hawkish, dovish. Dovish means that it's just soft. Really not much that's heavy on our economy as far as anything coming from any upcoming hikes. Obviously, 125 basis point hike will be the end of a nice pump, because then everybody's going to be asking, why are you hiking the interest rate? But in this case, he cut. They asked him, are you going to cut next year? He's like, basically everything is on the table, right? But he's not saying a definitive no. So with that, I hear a bunch of questions when it comes to the election, a bunch of questions when it comes to the next administration and Trump. And what he said to everyone was pretty clear. No, under the law, he cannot be fired by Donald J. Trump. And I literally ask you that question. It came at the right time. 330 votes right now. What should Trump do with Jerome Powell? And you told me that he should fire him, most of you guys. So one thing I know about Donald J. Trump, guys, is that he doesn't like to be challenged. So he might find a way if he so chooses to, but hopefully it doesn't really get that bloody when it comes to the Fed. One thing we know, guys, is that whether it's Jerome Powell or it's somebody else, the economy is on a comeback right now. The economy is pumping up. Like literally, Donald J. Trump has an incredible market, an incredible economy as far as inflation goes, because it's not the lowest, it's not 2% core inflation, but we know that it's heading that way. And now they are already starting to cut the interest rates. So, I mean, I just see a mega comeback for the U.S. economy, not only the index, stocks, but also crypto. Look at right now, it's almost $77,000 for one Bitcoin, guys. Are you joking? Almost $77,000. I'm going to end this stream. I'm going to enjoy my life. You guys are going to be watching something and boom. Look at this. We just broke all-time high. Guys, OMG. I mean, who bought Bitcoin? Who bought crypto? Who's buying altcoins? Because right now, let's go to the 5 minutes. I mean, we might be able to get something right here. Definitely what we're seeing right now on the screen, guys. Let me go ahead and close this one, and because I want to do something pretty cool. Why not? I know I might be overdoing it, but come on, guys. Give me a break. Give me a break. Yeah, things are changing right now, guys, and a lot of people are feeling it. I think a lot of people are seeing how the economy is moving, the expectations of growth, and it all started because the 47th president of the United States won, Donald J. Trump. So we'll see, guys, very soon. We'll see how things change. Prices are running, and wow, I'm only gonna tell you guys I'm super bullish. All right. Links down below, everybody. Don't forget to get on MarchX, up to 10,000 welcome bonus. Please go ahead and support, guys. Find me on X, find me on YouTube. You're here watching. So I want to thank you. I want to thank you once again, guys, to 700 of you for coming in to enjoying this stream. We always have a lot of fun. We always have a great time because we care about, what's going on with the market. And that's why we come and enjoy the FOMCs, because we understand how things are going. But at the end of the day, here's a countdown, about 70 plus days to go for him to take the Oval Office, and for Gary Gensler to be fired, and for a lot of different things to, fall in line. But we're already seeing the price of Bitcoin going crazy. So that's going to be awesome. Thanks for watching, everybody. You've been incredible. Thank you so much to the new subscribers, to the moderators for coming here to the stream. And just enjoy. The price of BTC is running. I gotta take a break. Gotta rest up. But you're gonna have more videos coming from me as you are used to. Have a good one, guys. That was a good FOMC meeting. We had a bunch. I mean, the price right now is pumping. So go ahead and enjoy, and let's make money. Peace. Thanks a lot, everybody. That was a good one.